The Hedgeless Horseman here. It's April the 10th. It's technically April the 9th still in North America. First of all, thanks to the sponsors. I always come up with a bunch of stuff to talk about, news or ideas about the market, maybe some motivational stuff. And then it's sometimes I forget a lot of them, including some news actually. But I'm gonna do the usual, some musings, and let's look at some news, and also I think at least one new company actually that I don't think I've talked about before. Anyway, let's dig in. Markets. If you might be aware that it's like all of a sudden Trump raises tariffs on China to 125%, introduces 90-day pause for all others. I mean, a lot of people say that's because the bond market, the rates on U.S. Treasuries was going up so much that it was causing big problems, and obviously one of the reasons they're doing all these tariffs, I would assume, is because the U.S. deficits. So I mean, if you're running big deficits and the rates you're paying for said deficits or all your debt is going up, that's not going to be great, right? So I mean, who knows? I never know. I mean, I'm not a fly on the wall in the White House. And frankly, it's like I don't really care. I mean, it's like I said in the last video. Linearly, yes, everything is right now. Well, that was yesterday going, to shit, except gold. Except gold miners are going to be making, record margins. But then you always have to factor in the fact that there's a lot of humans and a lot of voters that are feeling pain, and politicians, yada yada, central banks, they tend to do things. Especially, I mean, I think 2008, 2009, and what happened after that. I mean, basically opened up, a whole new toolkit for them to, manipulate markets to keep them from falling. So that's precedents. That's some precedents, basically. And yeah, lo and behold, all of a sudden, I was just sitting there. I think I had just came back from the gym or something, and all of a sudden I've seen copper not being at -1%, it's up 7%. And I looked at the previously red markets, and they were up like 6%. Nasdaq closed up 12%, S&P 9.5%, Dow Jones 7.87. I don't think Europe. This probably was after the European close, I guess. But I mean, it's just absolutely stupid. Everything about this is stupid. It's like, oh, Trump raises tariffs on China and then have a 90-day pause for all others. Did that actually add 12% of all intrinsic long-term discounted cash flow value of the Nasdaq? Did that increase by 12% because of this high headline? Of course it didn't. I mean, at face value, it's just a 90-day pause. So, but I guess it shows. I mean, how many algos are in here, and how many, let's say, are really wanting this bull market just keep going, because Nasdaq. I mean, all of these indices have been at all-time highs, and the U.S. has been, record overvalued, the U.S. stock markets. So it's going to take a lot, I think, for people to give up on that. I mean, it's like, I think I showed a stock yesterday about a short for some guy in H&M, where it's like, he went into H&M after it had gone kind of vertical. H&M, the clothing stock, the clothing company. After it had gone kind of exponential, then it dipped, and then he thought, well, I'm gonna be rational. I'm gonna be a long-term investor. I'm gonna buy the dip like everyone says. after it has gone exponential, uh, it proved to be a medium-term top. It kept going down. It kept going down. First, said person added on the way down. After a few months, I guess, all of a sudden he changed his mind because the dip was getting dippier, and then he started to sell. So then he spent a few months, I guess, selling right down to the next bottom, and then it turned up again. So my point is that after, if I mean, you can take Bitcoin, whatever, anything that's gone exponential, if you are not a part of it, or you are a part of it but have no idea, don't care about how exponentially it has gone or how overvalued it is, you just want to keep making money on paper, right? That's what I think the problem for the Bitcoin hodlers, for example. If they only learned how to, the only thing they've ever made money is in, let's say, hodling Bitcoin. They're probably kind of gonna hodl Bitcoin either until it reaches, I don't know, I mean, they're up even more, or they're almost at zero. I think the latter is much more likely. And if it's not, I don't think it's going to go up that much. I mean, it's just tracking the Nasdaq now, so it's very much a risk-on asset. My point is like there's obviously everybody invested in these indices wants it to go up. The U.S. Well, the president, I mean, he cares about the support of the people, all the industry people, maybe lobbyists, yada yada yada. And kind of the Fed mandate has somewhat become to actually keep the markets up, and a lot of the U.S. economy rests on these stock markets. But I mean, the idea that, I mean, this at face value would add 12% or 10% to all long-term intrinsic value of all the companies included here, 500 companies, they suddenly become 10% more valuable. For the, if you look at the discounted cash flows over the next 50 years or whatever, and discounted back, of course not. I mean, it's crazy. It's a ridiculous market. Absolutely ridiculous. But it's like everything lit on fire, basically. Gold was already up, actually, but it didn't really give away the gains. It kept going up. Silver responded well, and of course copper again was up like 6-7%. Oil climbed back over 60 and was up like 5-6%. Literally everything, including shit crypto, was lit on fire. So very much risk on. Bonds went down a bit. I mean, my point is only, this is, in my opinion, absolutely ridiculous. But I think it's a sign of just how short-term momentum driven, or how many algos are out there, etc., etc. We might be down half these numbers tomorrow. It's like you have no idea. And that's why, which I already talked about, I mean, look at the volatility. I swear, it's like if anybody's been trying to trade this, I mean, imagine trading this. Gaps all over the place, counter trend gaps. Well, this is first a gap down, then a counter trend. Gap down, continuation. Gap down, continuation. I guess this was also a gap or some news, whatever it was. Straight up, then down. Gap up, down, and then all of a sudden everything is up. 7 to 12%. This actually was up 12%. I think it was the biggest reversal in Nasdaq ever. I think that might be the case. Think about how ridiculous that is. It's like saying that, whoa, I mean, I don't know what the intraday swing might have been. It must have been like 15%. And if we play around with the idea that's like Nasdaq, yes, it's not exactly the US economy, but it's like, that's still a lot of, I mean, some reflection of the U.S. economy. Did the long-term value of the U.S. economy swing by 15% in intraday just because Trump said, I'm probably going to pause tariffs for 90 days? I mean, it's absolutely ridiculous. So that's, I mean, evidence of what a joke the market is, and I think this is evidence where it's like, again, I cannot imagine how people who are day traders or whatever try to suffer through this. Or just look at the mining space. One day they're down a lot, the next day they're up a lot. I mean, today's I saw some juniors in the portfolio, or at least once, like up 50% or 47%. And the day before they were down 20%. It's absolutely incredible. Absolutely incredible. I think, again, the market is getting more and more short term. I think you have to be, I mean, a value investor. We're so few today that are actually value investor. That is not even fun. There's a, where is that? I mean, here I made a memes like I hope they're watching on momentum traders get seesawed. Here's one of those slides. Decline of long-term investing. This is the average holding period of shares on the New York Stock Exchange, fallen to new lows. And I bet this is 2020, I guess. I bet it's even lower now. So just consider how, I mean, this is telling what the time frame is. Sure, there's a lot of greater focus on short-term results, emergence of high-frequency machine trading, so they're going to be churning through shares, yada yada. But it might also make the stock market more volatile in the short term. And everybody and paper losses hurt more than paper profits, and nobody wants to be a part of any paper loss. So the more they see it, I think they're gonna have to do something in order to mitigate it. So the way I see this is, I think this is kind of telling what the time frame is, and I think it's even shorter probably for the marginal investor in the junior space, because there's a lot of kind of micro cap flipper accounts showing up, looking for illiquid stocks. Run sort of a pump on it, for example, because they're after the next, whatever, a 3 day, 1 week, maybe some swing trade. But I think it's telling. So it says something about how far ahead is the market looking for any particular company. In my opinion, I think, well, not even now. Well, in shitty sentiment, not even current news really gets cared about too much. I mean, if it's good news, we've seen sell-offs when the sentiment is bad. In good sentiment, we see actually stocks pop on bad news. I remember saw that in on the ASX when there was a copper craze a year or so back. There was some pretty shitty drill results out, and some junior went up like 100-200%. Price and value goes right out the window at extremes. So what does this mean? Obviously, the edge then, if the market is more short-sighted than ever, it only cares about, if even that, the next news release. Well, if I care about the next 10 news releases, and I buy it today, sooner or later, time is going to pass, and those 10 news releases will have come out. If that increased the value of the company, let's say significantly, I'm probably going to be up on my purchase that I did before the 10 news releases were out. But I have to hold through 10 news releases. If there's 10 net positive news releases, I buy it before the 10 positive news releases are out. Let's say that's a 12-month period. I would expect the more net positive news releases I hold through, the more I should be up, right? I mean, if the 10th news release is 12 months from now, if I buy the stock 1 day before the news release, let's say I might make something if it's not priced in. But if I held it through all 10 news releases, maybe I'm adding, let's say 5-10% per news release. All of a sudden we're up to 50-100% return on 12 months, which is absolute fantastic return. That's how you obviously take advantage of what everyone is doing. That's the thing. It's like everybody's caring about macro. I don't give a shit about macro, really. Not much, except knowing that, basically all roads lead to gold. So yeah, huge edge, absolutely huge edge. And again, how do you take advantage of this chart? Is short-term trading taking advantage of this behavior by the marginal investor? Is trying to guess the next short-term move um, the way to play this? Obviously not, because that's what everybody is increasingly doing. That's the thing. I mean, the only way you take advantage of this is to have longer time horizons. I mean, back here, if we assume that this is somewhat correct, it's like, the market was pricing in the news of companies, let's say, or what they thought the company was going to be valued up to 5 years from now. Yeah, okay, if you're looking 6 years out, you might get an edge. Like, you care about an usually 6 years out, but that's such a long period that it's hard to be, that accurate. Because you have to be more meaningfully accurate on for year 6, when the market is actually maybe quite accurate, or it's like fairly pricing the 5 first years. 6 years out, very hard to have any idea what a company or the world looks like, and you have to be right as well. So that's very hard. But that's the thing. It's like, how do you take advantage of this? That this is the marginal investor's time frame. It's obviously to do the opposite. Abuse the fact that it's so short term. Abuse the fact that it doesn't care about news releases 3 months out, 4 months out, 5 months out, 6 months out, 7 months out. If you can come up with scenarios where you think that, hey, I mean, over the next 12 to 24 months, I think this company can have done this, this, and this, and you're buying it before all of that stuff happens, when nobody cares about it, and that's reflected in the share price, meaning it's not pricing that in, and you can figure out, like, why the hell is this stock selling so cheaply? Because, I mean, this might happen, that might happen, that might happen, that might happen in the next 12 months. Well, that's your answer. Nobody cares. The market is not pricing that in. That's how you abuse it. Uh, uh, yeah, I mean, it's like, honestly, it's like today, for a while there, I was just sitting. I think this was before the turn. I was just sitting, staring at the market. It's like, I have very strong opinions. Like, I'm pretty much offended by the market. That's the thing. It's like, I'm not too materialistic. I don't care about the money that much. I want to have fun. I want to feel like, it's like when I play any games, really. Well, not any games, but it's like, I enjoy a challenge. If I'm doing something, I want it to be challenging. It's like, if I played a computer game or a video game, and it's easy in the sense that you're already destined to um, complete it. In a sense, it's made that so everybody can complete it. I hate that stuff. That just feels like time wasting. So it's like, if I, let's say, play some PC games with some friends now and then, it's like, we're playing usually on the hardest difficulty, because that's the only way I get any fun of it. I don't want to know that I'm gonna win. I want to be, a lot of people might not, uh, identify with that. It's like, I have some friends who don't identify with that. They're like, they get discouraged if they lose a game or something. I'm more than okay if I win 1 out of 4 sessions or something like that. I actually typically enjoy the challenge. I want to figure it out. I want to solve things. And that's the thing. Also, going back to poker, it's like, the hands I took most pride in a sense, or got most excitement out of, on a personal level. It wasn't the hands that were the biggest pots necessarily. Yes, you get a thrill from it, especially if you won like a really big pot. But it was actually the hands where you outplayed the opponent in the most impressive way. It's when you outskilled, outthought, out outplayed the opponent. Those were the most fun hands because you really, really earned it. You felt like you took pride in the fact that you went, 4 levels deep, let's say. You played 4D chess. And then the benefit of that is that you made money. Assuming they didn't suck out on the river or something like that. But it's like, those were the most gratifying hands to play. And that's my problem with especially the junior sector now, because it's like I say here, making money from the current conditions is like winning the Paralympics as a fully functioning person. Sure, you get the gold medal, but it's really a participation trophy which proves nothing. Without a challenge, there's only the money, no pride. I mean, it might sound silly, and I know a lot of people are only in this sector to make money, and it's like a lot of people are complaining, and a lot of people are lazy. God damn it! I mean, uh, just look around out there. I mean, everybody kind of demands very high returns, but if they don't get it immediately, it's like all they do is whine, whine, whine. And then you look at their portfolio and you can tell they have no idea what they own really. And they don't want to spend the time learning about what they own. They don't want to think it through. They don't want to spend the time and actually take, let's say, responsibility. It's much easier. I mean, I know that as well. It's like if you talk about some companies, and let's say, well, in a bull market everything goes up. But let's say you have a uh, paper success here and there. Yes, you might hear from someone like, oh, thank you for, getting me or alerting me to this store, let's say. But I swear it's like a 10-to-1 ratio. Now I actually haven't been trolled in quite some time. But typically, the the deal is kinda, if somebody loses money, it's never their fault. If somebody makes money, it's thanks to them. You see that all the time. It's like people don't want to do any work, but they want super good returns. And if they don't get super good returns in a timely time frame, they're not like, maybe there's something I missed, or maybe I have to wait more. No, it's like they start bitching about how the sector is shit. I mean, I've seen plenty of people like, oh, um, I can't wait to get out of this sector when I break even. That is just mind-boggling. They don't have any idea where we are. They have no idea about the level of cheapness we're at. It's like this is, as we can see, I mean, retail is absolutely not entered the gold bull market yet. I mean, again, that's why we don't see buying in the gold juniors. Retail does not typically care about price to value. Retail are not good investors. Retail buy what has gone up a lot. And that is when the easy money is done. Same thing in the junior sector. Retail piles in after the sector is 200-300% off the bottom. That's when they get interested. They don't care about buying something that's like, the only way this can really move in a big ways up. They don't care about that. They care about what has gone up a lot, because they assume it's going to keep going higher. And here's like, gold miner all-in sustaining margin, ASIC margin 52%, highest in over a decade. So, I mean, this is the highest, and this is again percentage based, so it's not, you can't look at, well, back here gold was much lower. No, this is percentage based. Margin. Highest margin since at least 10 years. And I've seen charts here, for example, I don't know who did this, but ASIC margin, that other slide went back to 2015. This one had expectations of 881, and this is not percentage, but it's dollar terms, okay? Higher than 2011. And the 2011 gold price was like 1900, and 556 ASIC margin is not 52% or whatever it was. So And this goes back to 2007. I doubt gold was at $280. So in at least, let's say, 20 years, this is the highest value an ounce in the ground has ever had. And you still cannot. I mean, it would make sense if juniors were trading for, like, I don't know, $500 an ounce. Then I can get it. But it's like some juniors wouldn't even be, I think, that expensive at $500 per ounce, given that there's ASIC margins of 54. So it's like what the gold price today is, like 3,000. So that's $1,500 in ASIC margin per ounce. $500 per ounce is only one third of that. And there are mines that are expected to be even higher margin than that, have, let's say, $1,000 to $1,200 all-in sustaining costs. It's just absolutely obscene how cheap this sector is. And okay, let's also talk then about what is actual value. What is actual value? Well, actual value is, that's only known in hindsight, right? That's only known after a mine has produced all its gold, and you tally up, how much did they make on that mine. If we're talking, like, I don't know, no-brainer value, one could look at Cadia, for example, in New South Wales. Obviously, Inflection is hoping to find another Cadia or another North Parks, whatever. It's like North Parks has, like, I don't know, 100 years of resources or something. Cadia is, I think, it's a copper-gold system, copper-gold porphyry. I think it's the largest gold producer in Australia. They're whatever you want to look at. It's like on an ounce basis or a copper pound basis, it's some of the highest margin when you, again, include the byproducts there is. That mine is making a shit ton of money, and I don't know how long the Cadia East has left, but it's like almost regardless what the gold price is, they're gonna be making money. And let's say that lasts, I don't know what the mine life is again, but let's say 30 years. That's some serious effing value right there. And it is, of course, a tier 1 deposit. When does this not matter? Well, if you're a pre-discovery play, the actual value of your ounces will not be known until the mine is producing, and then when it's produced for its entire life, in a sense. I mean, that's only when you get the actual receipt. How much did this project make? And of course, it doesn't matter that much what a gold price or what a early stage project or whatever project that's not going to be around in production for 10 years or something. Doesn't matter too much what the gold price is today, or even what the gold margins are today, in a sense. But the best information we have is what the current gold price and margins are, right? That's the closest we can get to what the gold price is tomorrow, or even 10 years from now. It's what it is right now. And right now, at face value, gold ounces in the ground have never been worth more. And obviously, the more probable and closer to gold ounces getting taken out of the ground, being sold at like $1,500 ASIC margin, the closer you are to that, the more tangible the current conditions are. If I have a deposit that's going to be a mine in 10 years, it makes sense not to, maybe price them at $1,000 per ounce, right? Because you don't know what the ASIC margin is going to be in, let's say, 10 years. If I had a deposit that was going to become a mine tomorrow, it is extremely impactful and relevant what the gold margins are today, what the gold price is today. So the closer you are, the more probable that a gold deposit is actually going to become a mine, the more probable it is actually, won't take 10 to 15 years, the more relevant the current conditions are. And then you have, I mean, compare that to some shitco as like might have some crap deposit somewhere that's not even tier 3, and or you, whatever, you have a pretty good deposit but you know that's never going to become a mine because it's either too remote or the locals would never allow it, or it's whatever, come up with any kind of thing that has no real risk of getting monetized, so it never will matter perhaps what the gold price and gold margins are. So it's like that's one again mistake I think people, it's like when I talk about how this is the most brain dead sector I've ever seen, how it's like right now it's so easy to know you're buying cheap that it's not even fun. It's not even fun. Gold ounces in production have like average ASIC margin of $1,500 per ounce, and let's say I can buy highly economic ounces even at lower gold prices. That's probably going to be permitted, and in this case I'm thinking about First Nordic as a good example. And I can buy them for let's say $40 or $50 or whatever. How what are the odds that I'm wrong? What are the odds of I'm overpaying? I have never seen anything like it. It's not even fun. It's not even fun because it's so obvious. It's like there should be a textbook like, what's the value? Well, we can see here that an ounce in the ground has a ASIC margin of $1,500. You can buy one of the best projects, let's say in the ground. What am I paying per ounce? Let's say $50. Is this a buy? Do you need to do some super contrived calculations? No, it's the most obvious thing I've ever seen in my entire life, and probably what anybody in this sector still alive has ever seen. That's how fucking dumb it is. And that just drives me up a wall. It's like it shouldn't be like this. It's not fun because there is no challenge. There's absolutely no challenge. Yes, we'll make money. Yes, we might make a shit ton of money from these levels. But it's not like we can pat ourselves on the backs and say, oh, I really figured it out. Yeah, I really took the time. It's like I was looking at this and that, and I spent a month just thinking about the risk reward and the case for gold juniors, whatever. No, it's the most obvious buy I've ever seen, and anybody probably has ever seen, and the most obvious we'll probably likely ever see for the rest of our lives, I would guess, unless gold goes to $4,000 and the ASIC margin is $2,500, and we can still buy them for $50. you know. So it just removes the, I don't know, gratification of yeah, it removes the challenge. Now it's like, yeah, so what, I'm gonna make money. It's almost empty money in a sense. I don't know, maybe not a lot of people will agree with me, but it's like I enjoy it. One of the reasons I like investing is because it's like a puzzle in a sense. You have to outsmart the Mr. Market. You have to outthink it. You have to come up with like, oh, what's one of the weaknesses of Mr. Market? Well, he's very short-sighted. Okay, how do I take advantage of that? So if I apply all these tools and think about all these tools and use it in practice, I deserve to have good returns. But it took work to actually do it. So not everybody may be able to do it, and that's the hard part of a richly valued sector, because it takes a lot of time and effort to actually find the ones that are not overvalued or even fairly valued. At the highest, there's not going to be many of those around. Ounces in the ground might be selling for, who knows? I mean, at this rate, they might be trading at $500 or 500 to $1,000 in a hot sentiment environment. If the ASIC margin is like 1,500 or 2,000, I mean, then it's not even outrageous if we're talking a project that can actually get built. But then you have to do some thinking, and it's like most people are gonna, from those valuations and sentiment levels, most people are gonna lose money. The next big move is probably gonna be down, a correction, everybody's in. Now it's the complete opposite. Retail is not anywhere to be found. I don't even think the people who are aware of this sector appreciates the current situation. Because when you see people say, "Oh, I'm gonna be glad when I get out to break even," they have no idea, how this sector behaves. And I did some. I had another. Yeah, amount of times in history people lost money buying a sector at record cheap levels, waited a few years and lost money. Zero. Where in this chart here, let's just assume that every dip, every correction, every bear market uh, was not only a bear market or a correction, but they were actually cheap as well. I mean, it doesn't really matter, but because they still turned around and went up. Whenever has this sector fallen and never gotten back up? Uh, there are zero examples of that. Have you ever heard anybody say, "Yeah, well, and again, I'm going back to stock picking. It's like again, I think a lot of people get lazy in the way that they just buy whatever crap they can find, and then they're thinking, well, I mean, the next move is said to be up, so I'm going to buy whatever crap I can find." No, priority number one is picking good companies, cheap good companies. Priority number two is wait until they don't are not cheap anymore. A shitco is worth zero and should go to zero and stay at zero. That's completely different from a good economic deposit that's trading for 5% whatever of its ASIC margin today on those gold ounces. Totally different. So not even comparable. But when did this sector stay cheap forever? Did it stay cheap forever here? Obviously not. Did it stay cheap forever here or any one of these corrections? Did it stay cheap forever from here? No. From here? No. Where are we in the junior space? We're down here. And the price to value gaps, like I talked about this in 2015, yes, the gold price was down here and so are the juniors. Now the gold price is up here and the juniors are here. This is not, today is not even remotely comparable to 2015. And people still can't get themselves to buy. And the same people who are whining about, I don't understand why haven't retail came in yet. They're the ones that are, somewhat close to actually selling out because it hasn't moved yet. So they're kind of proving the point, ironically. Not even the people who are, not everyone who is aware of this sector or is invested is really that bullish because it hasn't moved. What makes them think that average Joe that has no idea about mining or juniors, never invested, what are the odds that they are going to find their absurdly cheap junior and say, oh, that's a buy? When the people who can appreciate or should be able to appreciate how cheap it is can't even get themselves to buy more and are this close to actually selling out and find something that's done this already because it's called working. That's the ironic thing of it. I mean, you know me, I'm always fully invested, but it's like if I could pick over the last 10 years since I began investing in the junior space, if I got a shot, it's like, okay, you can pick whatever time period to invest in. It's like, when would you want to start investing, let's say? I mean, obviously, I would want to start at the bottom 10 years ago so I can compound. But if we just or I should put it like this: if you said it's like, hey, you can start investing. I'm gonna give you, let's say, two bottoms, two scenarios. And now they don't need to, and they don't need to tell me exactly what year it is, but just the conditions that are present at one point. It's like, okay, Scenario A, you can start buying in this sector when the gold price is 1150. Almost no gold project makes any money except the tier 1 deposit. Some gold miners are close to going broke. The juniors you're seeing out there at face value at these gold prices, their projects are basically worthless. Let's say negative IRR, negative NPV. Okay, that's one scenario when you can buy. If I would hear that, I would think like, yeah, okay, well, that sounds like a bottom, because obviously the gold sector is not going away, so the prices must go up. Otherwise, every mine shuts down and the prices go up. So it's like, yeah, good one, because obviously sentiment must be super shitty depressed, and the next move got to be up if it's that low. The gold price is that low that almost no mines are making money. Then scenario 2, gold price is at 3,100. Inflation costs have not kept up, so the average all-in sustaining margin, ASIC margin, for the gold producers is 52%. Highest, or 54, whatever it was. Highest in at least 20 years. A gold mine is literally a gold mine. A gold ounce in the ground has never made more money for the owner than at this exact time. And by the way, ounces in the ground are selling for, let's say, high quality, economic, likely to become mines type ounces are selling for 50 to $100 or something. Because that's a big difference. You can have uneconomic ounces selling for $10 and they're still overvalued compared to ounces selling for $100, because the latter is actually going to become a mine where it matters. They're actually going to take advantage of the ASIC margin someday, whereas the project is never going to get built. It might trade up to $50 per ounce, but it's never going to get built. So it's a trading sardine with dilution, and the long-term value is pretty much zero, if you dilute it long enough. But and you can buy, you're in the best environment the gold sector has ever seen. And you hear it's like, oh, and by the way, ounces in the ground are selling for almost bear market levels. Like the sector wasn't making any money at all. Like the gold price was, let's say, $1,800. I would obviously pick the latter, because my margin of safety in that case would be like $1,000 for the gold price. More than that, let's say $1,200 on the gold price. So I'm buying something cheap, even if gold drops by $1,200 tomorrow. Whereas in the first scenario, and this is of course 2015, you had no margin of safety. The bet was that these will likely go up if gold price goes up, so these deposits at least appear economic. That has no margin of safety. That's just a contrarian trade. You're betting on the cyclicality of the gold price. Now it's like, well, you already know what the gold price is. You didn't need to bet that gold was going to go higher. Gold has gone higher, but you don't need to pay for it. Again, going back to, this is the most ridiculous shit I've ever seen. It's like, how can you have any hope in humanity and free markets seeing this? It's not even fun. It's not even fun. I bet I could make at least 3 different portfolios, 20 unique companies each, and I would expect that to make a lot of money. Retail's absolutely not enter the gold market, and this we looked at. This we looked at as well. Some news: AMX expands central polymetallic zone, drills 39 grams per ton gold and 331 grams per ton silver, 1.14% Cu, 3.39% zinc, and 2.35% lead over 1.3 meters. AMX, I think, is one of those companies that is very cheap. It's not. Sentiment has taken a big hit. The consensus, I think. I came in after. I actually got interested after it had went down 50% on their MRE, because before that it's like it was a market darling, everybody loved it. They were trading at around 330 million market cap for a while, I think I remember. So it's like, yeah, the hits they were putting out were, kind of remarkable, but the market also saw that it's not a sleeper story or anything like that. But then it's a case where it's like, okay, a lot of people thought that the MRE was going to show like 3 million ounces. It came out at, I think, 1.6 million ounces. So that was a big disappointment relative to the expectations. So it got slammed, and now it's around 100 million market cap. It's in Quebec. They have a PE out, which looks absurdly, let's say, profitable. A small capex of 226 million market cap, and obviously there's a lot more growth and growth potential. So as the CEO said in a recent interview, I mean, this is a case where it's like, and this is kind of typical how these, orogenic gold deposits, I mean, how they turn out. It's like you start with a mine, you start with a resource and a mine, and then it's just, probably gonna keep going and keep going. I mean, they've hit mineralization here, for example, in the high grade zone down to 1.6 kilometers, and most other zones are quite shallow. So you have no idea. I mean, the total endowment in this area might be probably, a multi-million ounce system. So it's in Quebec, great infrastructure, literally tier 1 jurisdiction, kind of tier 1 location. It's Quebec, so I would assume low power costs as well. Kind of low capex project. I think it's very much permittable. They have Eldorado Gold as a shareholder. Yada yada yada. So $100. I mean, if this was in production today, according to the PA, let's assume the PA is a bit optimistic. I mean, the all-in sustaining costs were estimated to be $880, I think, which is obviously absurdly good. But let's put it at 1,000 or 1,100, 200. 100,000 ounces of that at these gold prices. We're anywhere close to these gold prices at these margins. I mean, the free cash flow is probably more than the market cap every year. That's the stuff we're seeing out there. So would I say Amex is cheap? Yeah, I think it's pretty obvious it's cheap. I mean, it's also robust enough that the current, albeit not huge, resource should be doing churning out a lot of free cash flow at $2,000 gold. So it's not like it's at least at face value, it's not like it's a risky project. It's in Quebec. It's expected to have sub $1,000 all-in sustaining costs, and they obviously have more. So I mean, this is for the, I mean, I think it cost them around $100 million to drill this out. So you're buying everything for the sunk cost, or maybe even lower, less than the sunk costs. That's how crazy the sector is. Who would go out and look for gold if you find, let's say, 1.6 million ounces of high-grade gold in Quebec, and you get paid the same amount you put in drilling it? Because it's not like you can put 100 million everywhere and you're gonna prove up a deposit like this. No, it just doesn't make sense. That's the thing with this sector. If these valuations made sense, nobody would be looking for gold, which is ironic given that the gold mines that are in production and have been found, they're at peak value. So nothing in this sector makes sense right now, and that's going to be sorted out, believe you me. The retail sector, the retail people might ignore reality, but I can't ignore the effects of ignoring reality. Sooner or later, every single mine in operation today belong to the mid-tiers or the majors is going to need to be replaced. And there's simply not a lot of projects around. So either there's not going to be any gold producers in the future, or these projects will have to get into production, either be acquired and put into production by larger companies or the juniors themselves. Because I think we're going to have a gold mining sector in the future. I mean, look at Agnico Eagle. They're even going to Colombia. they used to stick to. I mean, they've been famous for sticking only to tier one jurisdictions: North America, Australia, and Scandinavia. And they are going to Colombia to find a potential 10 million ounce deposit. That says something about the lack of projects out there. Let's see. Eloro announces closing a brokered private placement. I don't know if I don't think I talked about it. No, probably not. Hopefully, I mean the thing is, I hope they keep an insider Eloro participated and used to continue exploration and develop the Ischia project, southern Bolivia as well as general. I mean, yeah, I would expect them to keep putting out with this money, keep putting out pretty juicy silver, tin, and polymetallic intercepts. Ischia is probably going to grow the more you drill it. And I think it's going to get better the more they drill it. And you never know when, there's an inflection point, let's say. I mean, maybe that comes with a PA or something, where it's like, oh, heck, this is actually worth a lot. Because it's Bolivia, it's low cost jurisdiction, all that. And of course, they have an absolutely enormous, low grade resource as well. So if we're talking like beta, but the point is that, again, going back to an earlier point about trading sardines, these guys are. I mean, the high grade zone. That's going to be economic. I know what San Cristobal is making and what their grades are. They're making quite a bit of money, so that is tangible value. So I think Eloro, even though yes they have a a very large low grade deposit, but there's also like lower risk, higher grade component in it. That's gonna probably be economic at, quite a bit lower metals prices. And then we have the tin kicker. I don't know how that's gonna play out. I'm not a tin expert, but that seems to be probably maybe get a bigger and bigger part of the story, where you have kind of almost like two mines in one. One new company, Maple Gold, intersects 2 grams per ton over 108 meters, including 3 grams per ton over 55 meters, within 300 meter step out in the Nika zone. I think I've owned Maple Gold Mine for a while. I think Crescat was also invested for a while in it, if I'm not mistaken. They did a deal with Agnico Eagle. They bolted two projects together and did a 50-50 joint venture. Apparently that was another management team, and I heard a lot of people say that they were unhappy with the previous management team, and the share price pretty much sucked under that management team. And I don't know exactly what they did wrong. Did they just, did they drill the wrong places? Did they, whatever, did they light the cash on fire doing a bunch of stupid shit? I have absolutely no idea. I don't remember. I didn't follow it that closely. And let's look at the presentation. So they have, their flagship project, they actually, one thing to note that they redid the deal or the partnership with Agnico. So now Maple Gold Mines actually have the combined project, the Agnico assets plus their own on a 100% basis. The caveat being that Agnico has a back-in right. They can get 50% of the project back for, I think, $12 million plus twice whatever money was spent up to the point of them wanting back in by Maple Gold Mine. So, I mean, if Maple spends 40 million and Agnico says, hey, we want back in, they would get 50% and they would have to pay Maple 60 million plus 12, so $72 million. That's one thing that, the thing is, obviously, if things go really well, you would want it kind of 100%, or at least that you were going to get free carried in a sense. But, at the same time, it's kind of back end load. If things go really, really well, Agnico will get back in, but at the same time, if they do that, Maple gets quite a bit of cash, depends on how much work they've done, and Agnico is probably gonna push this project or projects to production, so you're getting 50% of something Agnico is going to put into production, meaning that they're probably going to buy you out. So in a sense, it at least means things are going well, you know. And the company's not really that expensive either. So I mean, I kind of think that it's reflecting the fact that 50% back-in right exists. Otherwise, I think this would be valued higher. And then you have the scenario where it's like it's not big enough for Agnico. But what happens if, I mean, the weird thing is like, okay, let's say another company wants to buy it. What happens then? Does Agnico 50% back in, right? So how do you actually acquire Maple Gold? I'm hoping to talk to the company soon and straighten some of this stuff out maybe. But what got me interested in Maple was that there was a news release not too long ago. Which I just read actually. A 300-meter step out. So okay, what was the depth? 537 meters downhole or 490 meters vertical. So people was like, that's deep. That's not open pitable. No, I don't. Probably it's not. Even though, yeah, I mean theoretically you would make like a super pit, I guess. But I don't really care about that. The point is like after my the time I've spent looking at Agnico's bulk underground mines, Young Davidson, via how much time I spent on First Nordic appreciating Barsele as a bulk underground mine. It's like that's something I kept with me. So I mean this is like almost Barsele type grades. Well, from a bulk perspective, these are really good. Barsele average grade is higher for underground, but that's also some selective. I mean, if I don't know what the actual true width is, but it's like 3 meters at 55. I mean, that's gonna be economic in. Are they in Quebec? I don't remember. I think it's Quebec. So the interesting thing again, let's do some. I was gonna say game theory. So what do you have so far? The Douai project? I think they have the total resource is like 3 million ounces, or is it indicating for so 3 million ounces. 1 to 1.59. Underground 1.68. So lower than Barsele, but it's like inferred. So economic. Yeah, maybe. I mean, there's some bulk underground mines that are this low. But 3 million ounces. Okay. Huge potential pit. I mean, it's like this is 6 kilometers, so there's gold all over the place, which kinda is what I think what made Agnico interested and wanted to bolt them together, because like I'm thinking of I don't know their experience with Canadian Malartic, let's say, or probably Canadian Malartic. There's like if I remember correctly, when they as Cisco Mining has talked about that project, it was like, well, there was so many historic long intercepts of like low grade cloud that they figured, hey, I mean this is simply a very big system, but it's kind of low grade and nobody's really cared about it. But it's like I don't know if they have this in any slides here where they show the average grade of some underground deposits. No, First Nordic has a good one at least, where you see a bunch of the underground, bulk mineable grades. And this is Goldie. I think this is actually the underground component at Canadian Malartic. I think so. Or if it's Detour. No, okay. Canadian Malartic Odyssey. 6 kilometer footprint to so it's probably the underground component over at Canadian Malartic, or this is anyway one of the huge Canadian gold mines, and that's I believe has been the thesis. It's like, okay, it's been kind of drilled up to 500 meters depth, and there's like gold all over the place, but so far, maybe that's depending on the drill intensity, whatever. That you have these high grade zones, and they're somewhat patchy, and between it's like most of it or a lot of it's like 4.5 to 1 grams per ton. So it's like, I mean, that's the way I looked at Maple Gold Mines. It's like, yeah, 3 million ounces. That's obviously a huge endowment, and at these gold prices, even if the all-in sustaining cost would be like 2,000, you would be making money on this if you were mining it. But it's like, uh, not not the best quality project, I would say, because it's and I don't know that for a fact because I don't think there's a PA out, but anyway, I hope you get my point. It's like, it looks, somewhat patchy and all that, and most of the stuff is like 0.45 to 1 grams per ton, and then you have some kickers in between. The interesting thing is with this intercept here. So that's a 300-meter step out. 300 meters, I think, from the closest drill hole. And they hit, yeah, 2 grams per ton over 108 meter, 3 grams per ton over 55 meters. Uh, let's load this up. Or not. Okay, they have it here anyway. Yeah, okay. So, the 300-meter down plunge. Here's a previous hole, 132 meters, so 1.58, 100 meters, so 1.76, 5.49 over 9.6. And then they have this, which is even better. At least from a bulk perspective. Sure, the grades are a bit higher in the 9.6. That's a quite an interesting picture. Like 300 meter. I haven't done any tonnage calculation, but obviously, I mean, if you want another Goldie deposit, footprint's got to be huge. But like, who knows? What might happen here at depth? Are they, at the cusp of finding something, some place where these kind of coalesce? Let's say what's happening underneath here. And here you have target areas, open, this direction, that direction, that direction. So it's like, yeah, is there something happening here at depth? Because the way I look at it is like, I like the possibility of, like, you have 3 million ounces, decent quality mine, let's say. Nothing to write home about, not a tier 1 deposit. I don't think you would call it a tier 2 deposit either. But what if there's turns out to be quite a big bulk component here? It's like you find another Young Davidson type or a Goldie type, like Barsele type stuff at depth. A big blob of like 2 grams per ton or something. Then it gets quite interesting, I would say. Because let's say you find like, I mean, now these are very forward-looking statements. But let's say it, wait, maybe actually better here. 35 meters, so this is the Porphyry East zone where they're drilling as well. What if there is a blob materializing here, or it's like an underground component, and they could prove up a few million ounces? Like all of a sudden, this would become a pretty big project, and I would think that if you find something that's like actually really good, it's like then all of this I think comes into play, because once you set up shop, I mean, you could do it the other way around. I mean, even if they find maybe 1 million ounces of bulk, good, pretty good grade, decent underground deposit here. It's like all this together, it's all of a sudden starting to get quite interesting. So who knows? I mean, I would think that this is actually, I mean, the thesis of sorts, that there might be something even better somewhere here, because again, just thinking about how goddamn much gold there is. And I think it's that experience that led Agnico Eagle to want to bolt this duo project together with their whatever their project was called, their Yotel Gold project, which I think is this one. So this is what Maple Gold had already. This was Agnico Eagle and their Eagle mine even, and they bolted that together with this. And again, I would just assume it's because of the idea that what was found at, well, at least depth, I guess, in Canadian Malartic, let's say, that had a 6 kilometer footprint, that there was stuff hiding at depth. It's like it was just such a big system that, okay, there's a massive amount of gold here, and it turned out that, yes, there's also a big underground blob in this system. So this is actually starting to get interesting. I mean, this is just let's say this was actually, I think, one of the top five best holes they've ever done. And it's interesting again, together with the fact that this is a 300-meter step out, and they hit a result this good. Uh, yeah, I think, I mean, this looks kind of interesting, and I bought some shares in the open market. Bad thing, I guess, for Maple Gold Mines is their share structure is pretty horrible. 454 million shares out. I have no idea what the warrant position is. Okay, why can't I? Okay, can't check. Anyway, it's like, again, not a buy recommendation, but it's like this one might be an interesting one to put on the watch list if nothing else, because I think the upsides, blue sky case, let's say, is that this is just the first hit, and it turns out to be a big blob, big bulk blob, akin to some of the great underground mines in Canada at depth here. But that's a long shot, of course. I mean, we gotta assume that, but the fact is also it's trading at 31.8 million market cap, and I think they have like, I don't know, how much do they have? I don't know. I think they have like 5-6 million or something. So the thing is, Jesus. Okay. Did my internet? No. Okay. I might need to wrap it up. Well, I have to touch on this at least. Like, this is what we're kind of starting to see out there. You have insider buying. It's like you have insiders buying and retail panic selling. Usually, I don't think it's a good idea when you're selling into some of the people that know vastly more than you about the project. These are not that small of a buys either. So if he's wrong on this, on Goliath, that it's, I mean, he's betting that this is really cheap, and obviously Roger thinks this is going to be worth a lot more, and probably that it's going to be taken over one day. If he's wrong, it's going to sting even more. He already had 2.7 million shares, and he's doubling down in a sense. But hey, I've talked about Goliath a bunch of times. I mean, we've even seen analyst reports like anywhere from 4 to 6 million ounces all the way up to 10 million ounces. I don't know how it's going to play out, but I have a hard time seeing how, given the amount and predictability of hitting gold everywhere, I have a very, very hard time to see that's like, okay, if you have at least like 5 million ounces here, and we know what kind of grades they hit and all that. And I mean, at today's gold price, no question about it. It's like, how are you not going to be making money on that? But this, I think, still has like, well, it's hard. I'm not a mining engineer, but I think this has like, yeah, tier two, tier one potential, and it's absolutely not priced like it has, like it is a tier two, tier one project. So I wouldn't be surprised. I mean, I think it already started when it broke to the upside. It was kind of the recognition phase. That's like, this is not a run of the mill project. This is legit. This is like a discovery that comes along, every few years perhaps. And then we had the, what was it like? I don't know, big selling, and that, I think, again, a bunch of reasons. You couldn't find any fundamental reason for it in the last news release. It's just they wrapped up the drill season. But warrant selling, warrant selling. The stock was hot, so I think a lot of shorters jumped on it and yada yada. So a lot of like games being played, but obviously the CEO can't really penny flip this, so he's in for this amount now for, well, probably a long time, because he can. It's not like he's buying it at 1.35, 1.40, and then he's gonna flip it at 180 or something. No, I mean, I think Roger thinks this is gonna trade for several dollars down the line. So obviously great to see. I mean, to see the insiders of the insider of insiders buying. Same actually in Integra, and it's like Integra is almost. I mean, this is one of those cases that is somewhat driving me crazy in a sense that it's one of the, I think, most obviously mispriced stories out there. Let's see if market screen is still up. Yeah, so this is analyst consensus for Integra. Enterprise value in next year, 13.26 million. This might not have been updated with the share price going up. I'm not sure. Okay, I'm trying to refresh. Nothing is happening. Anyway, that is a ridiculous thing. It's like, this is kind of, run rate cash accumulation from Florida Canyon. So what this is suggesting that by next year, Integra will have almost as much cash as the market capitalization of the company. And when you think about it, it's like, wait a minute, it's like, that's just 1 year, or let's say 1 year, and assuming they meant full year, 1 year and 3 quarters, they will have the same market cap, the same amount of cash as they have market cap. So everything outside of that is free riding. And I think the EV/EBITDA today is like, I don't know, 3. Let's say 2 or 3 or something. I mean, expected. That's kind of crazy. So it's like, okay, so I'm in 2026. They have as much cash, so I could get all the money I paid, theoretically here, all the money I paid to buy this share, if that was $1.7, like, they could give me $1.7 in dividends. Theoretically, they would be emptying the coffers, obviously. So I get my money back. And then if these margins hold up, because Florida Canyon is not going to run out in 2026, so I'm going to be getting what, EV/EBITDA of 3 after I've gotten my money back for X amount of years, and they might extend Florida Canyon. And obviously in this analyst report they added a bloating of the EV in 2027. I guess that's when some analysts assume they're going to be doing a financing for, add debt and whatever for to build Delamar. But okay, let's say they do that. So the EV goes up to 300. I think they had like 370 or something. But imagine Florida Canyon and Delamore producing anywhere near these gold prices and these margins. That would probably, I don't know what that would be in like free cash flow per year, but probably more than 50% of that EV. So it's just absolutely crazy. It's like, assuming nothing changes, assume the gold price stays here, the margins stay here, are we to believe there's like, yeah, uh, by 2026 when Integra has 250 million in cash, that the company would be trading at 270 million? I do not think so. Uh, this is, yeah, one of the most, in my opinion, most remarkable sum of the parts cases there is. Uh, Great that oil has basically gotten kicked in the teeth, because oil, as you can see, there's a lot of big heavy trucks that needs a lot of diesel to run open pit, low grade open pit mines, and so those costs have gone down quite dramatically just in the last week. Um, but then you also, so I mean, again, just based on Florida Canyon, it looks like pretty goddamn cheap. But okay, fine. At face value, Florida Canyon won't be around forever. So I mean, it would be one thing if you had like, oh, we have, I mean, if you had like perpetual EV beta 3 in a sense, that would be kind of crazy. But the thing is, of course, that they actually, the sum of their parts, or their parts, are actually at face value even better projects, and they're not huge capex projects. The Lamar or Nevada North are not huge capex projects. So imagine, fast forward a few years, and the Lamar and Florida Canyon is in operation. And let's say a year or a year and a half from then, or two, Nevada North. But this goes back then also to the timeline thing. Let's put it like this, I have a very, very hard time seeing that if the management team executes, how I'm not gonna, make a few multiples in Integra. Because right now, Florida Canyon, it's kind of printing cash. Yes, if gold drops $1,000, Florida Canyon will be kind of trading water. That's, I guess, a risk in a sense. How likely is that? I don't know. Delamar is much better than Florida Canyon, with all in sustaining costs. So like, I think it's gonna, I don't know, the PFS is gonna come here sooner or later. Let's say $1,200, $1,300 up from the PA or previous PFS. That's still huge margin. That's still a big margin if gold drops $1,000. Remember, Integra, when they only had Delamore in a less advanced form, they had a market cap of 200 million alone, with only Delamore, no production. And at the time, I think the gold price was $1,700 or $1,900. How the F does this valuation make any sense? This is one of the most. This is one of those cases, I think, where it's like we're gonna look back at in hindsight, and because now it's like you're looking at this valuation, you're seeing these. Well, now you can't see them, but these ridiculous like EV beta ratios that it could be almost zero enterprise value in 1.5 years. You're seeing this. You're seeing the assets they have. You're seeing the jurisdictions they are in. You're seeing how much expected free cash flow they have from Florida Canyon. And then you look at the share price, and then you're seeing, it's like, how is this not just ramping higher right now? They are a producer, so the fact that the gold price is $3,100 is very, very relevant. But it's not going absolutely berserk, right? This is, so it's like, that's what I think kinda is, one sort of weakness is like sometimes you find these stories and you can't believe how cheap they are. And I have a few, and it's like Integra is obviously one of them. You cannot comprehend how the market can think that this is a even remotely close or a fair valuation. But then you have that vision. It's like to you it's you're looking at all this and thinking it's like, hey, this is easily like 700 million or something. Um, but at the same time, you don't see that reaction in the market. It's like some days it trades down, some days it trades up. It's like stair stepping higher. Or I have quite a few examples where I kind of, uh, I the market kind of won in a sense. That it got me to believe that what I'm seeing, the kind of common sense things, that how on earth are these three assets that are all monetizable, how on earth are they valued at a current enterprise value of like 210 million? That is just, at face value, that is just absolutely absurd. Uh, Delamore at current gold prices, NPV easily over $1 billion. Nevada North easily over $1 billion. It's especially Delamore, I think Nevada North. So if you stack them together, that's like, let's say 400 million here, a billion here, a billion here. So that's 2.4 billion, and it has an enterprise value of 210. That's a large effing discrepancy. But then you look at the markets, like it's just grinding, and goes down one day, up the next, and it's like you're starting to kind of, you start to not believe your eyes in a sense. And I've had plenty of cases where it's like my impatience kind of led me to, it's like, oh, I guess it's not true because the market has not yet made me look right, even though it feels like it's so obvious. And then out of the blue, all of a sudden, something happens. Some seller is gone, whatever it might be. It just, these cases just revalue and revalue and revalue. And then you're kicking yourself like, I was right the whole time and I just couldn't stick it out. Because the market was not making me look right in a timely fashion. But it's like, if we fast forward, let's say Integra is up at 700 million in a year. Or yeah, take that as an example. If I sold today, let's say, I go back and look at the fact that I sold, and it's like, wouldn't you ask yourself, like, why on earth did you sell this? What on earth made you think that, oh, I'm probably gonna, let's say, lose money if I pay 210 million EV for these three assets at record high gold prices, at record high margins, and they are all they're all US assets, so it's like, tier one jurisdictions. Both are actually in the literal, like, top one of the tier one jurisdictions. What the hell was I thinking? That's how I can foresee myself going back, because I like to think of it like that. It's like, if you take a step back and look back at your decisions, like, can you see how you made a rational decision back then? How would I justify it, like, not, let's say, seeing Integra as like, yeah, this is no brainer cheap? What would I need to come up with? That the gold price was gonna go to $2,000 and that these were never gonna be permitted? That's kind of, I mean, yeah, if that's the base case, yeah, it might not be that cheap. But based on what we know now is that gold price is at $3,100. And in the latest, was it a PA or PFS? I can't remember. Integra was obviously over $1 billion at $3,000 gold. Nevada North as well, I would imagine. And Florida Canyon probably because that can also be extended, the mine life and all that. So let's say, I mean, today maybe $500 million, and an EV of 210. It's like, what what is the market thinking? But that's the market. It also it gets us to fool ourselves. When we don't look right quick enough, we start to think we're wrong. That's why most people sell the bottom. Obviously, it's like, okay, you buy and have some conviction. It's like, oh, it's cheap. Everybody says the sector is cheap, and then it's like, oh, it hasn't revalued yet. We haven't. I mean, we haven't seen a moonshot yet in the junior sector, so I must be wrong. That's what people are looking for excuses to do: sell because. And I have friends I talk about this with, who are like, but they start to believe that it's actually never gonna go up. So they're trying to, in a sense, talk themselves into selling, and they justify it by thinking, well, because they can't make the argument, even if they don't know that much about mining, they can't make the argument that I'm selling something because it's overvalued. I don't think this is cheap. That's not why people sell the lows. They probably can see it's cheap. In this case, in the juniors, they're the cheapest ever. But if they haven't seen evidence of the stocks going up and they made money, they start to believe, or they just want to have the pain go away in a sense. So they start to rationalize selling. And the only way to rationalize selling, if you know you're selling something that's absurdly undervalued, is that you start to convince yourself that for the first time ever, basically in the history of markets, this time the miners and the mining sector, the junior sector, is actually never gonna go up. It's always gonna be record cheap. There's a reason it's called record cheap, because it's never happened before. So how often do you think it's stayed this cheap if it has never happened before? you know? But that's how it works. It's our minds, like confirmation bias, whatever. You start to fool yourself. You start to uh, not believe it's as cheap as you think, because you haven't seen evidence of the market agreeing with you, saying you're right. Let's trade it higher, and you look smart. You're in the green. You're making money. You got a receipt of you being so smart. When that takes time, I've done it myself. Excuse me. I've done it myself quite a few times. You find something just you think is ungodly cheap, you buy it, even if you tell others like, look at how cheap this is, and let's say nobody else buys it either because whatever, there's no momentum, the chart looks poor or something, and then maybe eventually you're like, well, okay, I think it looks really cheap, but maybe I'm wrong, or maybe it's never gonna go up. And then you come back to those stocks months later, or maybe a year or two later, and they're up a shit ton, and you're like, oh great. And the one you bought for perhaps because it was hotter and it was actually moving, that didn't actually perform that well. So in hindsight, you're like, I should have just sticked in the cheapest things I could find, believe I was right, and just stick in there, hold in there, hold in there, hold in there, go on a 1 year vacation, whatever. I would have made more money than if I just allowed the market to fool me. It's like, nope, your eyes are lying. They're not as cheap. All the economic studies, they're lying. They're not this cheap. I think it's an interesting thing because again, this is one of the most peculiar cases where it's like I'm dumbfounded. It's like, how on earth can this? But that's the thing also with, if we're going back to the record short time horizon for the market. The market is not pricing in that Delamore will get into production. It's not pricing in that Nevada North will get into production. So fast forward, let's say 2 years, and I mean, I don't know exactly when Delamar is expected to, start construction, whatever. Then you're in that, upward sloping Lassonde curve. But in the meantime, you're gonna get your money back from Florida Canyon until you actually finance it and start the build. So there's no really obvious super boring period in a sense, because like, okay, if you don't build Delamar, we might have as much cash as market cap in 2 years. But if you do build Delamar or Nevada North, you're starting the construction phase, which is the second wave of the Lassonde curve. So yeah, no, very interesting. And they obviously have like Red Canyon and other very interesting exploration cases. So yeah, those a rant. Not investing advice. I own shares of all companies I mentioned. Some are banner sponsors as well. Only invest money you can afford to lose. Not buying or seller recommendation. Consider me biased and all of that. And again, it's like, okay, closing thoughts. The market is absolutely wrong. The junior sector, Mr. Market in the junior sector has never ever been this wrong, probably in 40 years. And there is no instance in the history of the mining space where this sector has not gone up a lot from being the cheapest in the last few decades. This is not junior per se, but I assume this was the cheapest it's been in a long time. And this is probably the best rally that's happened in, 2000, the bottom 2000. That was an 11-year bull market after the sector was absolutely depressed. And you can see any fat decline, and that it could be, I mean, multi-year declines. When they finally bottom, they went up a lot. I mean, just this move here. Well, actually, this doesn't look that impressive. That's what, 17 to 45. Not that big, but at least, I mean, juniors probably went up hundreds of percent during that rally anyway. And here, I mean, some juniors went up like 2,000%. So, uh, yeah, there's if you want to justify selling low and selling cheap at that time, this sector's never been cheaper. You have absolutely zero evidence, historic evidence, that could justify that as being a good idea. But it's up to you. If you can't wait for it, I mean, obviously the obvious thesis is that, okay, anytime you buy a cyclical sector at record cheap levels, if you just wait a few years, maybe, you're gonna be up a lot. That's what happened every single time before. But if you think this time, despite the fact that gold is like, very demanded given the price rise, and the sector has never been more healthy. For some reason, everything is shit, and they're gonna stay shit. I don't buy that, but hey, to each his and her own. Thank you for listening. Bye bye.